Here are the top 6 day trading mistakes you need to avoid if you want to succeed at trading, and some of you are making these mistakes years later. When day trading, it's important to remember that chasing a trade is generally a bad idea. There's a few reasons why you shouldn't do this. When you chase a trade, you're more likely to enter a trade at the wrong time. This can lead to buying high and selling low, which is actually the opposite of what you want to do. The trade has already made its move, and now you're showing up late trying to catch a ride. It doesn't make any sense to get in at this point. It's better to wait for price to return back to the area, retesting it, and looking for a better entry at that point. Chasing a trade can lead you to taking on too much risk. This is because you weren't able to get the best entry. Now your target is further if you want a better risk to reward ratio. What'll end up happening is price won't reach your take profit and it'll come back and hit your stop loss. The best thing you could do is patiently wait for the next setup. Wait for price to come back to you before getting in on the trade. No matter what chart you use, using too many indicators on the chart is generally a bad idea. It can lead to information overload, which can make it difficult to make decisions. You can also miss important signals while focusing on the wrong indicator. Having a bunch of indicators on the chart can make it really difficult to read. How can anyone actually make sense of a chart when you can't even see it? One of the best things you could do is keep your chart as clean as possible. Strategy hopping is a big problem for people when first starting out. A lot of people years later are still making this mistake. Hopping from one strategy to the next, never figuring anything out, never sticking with it long enough. This is never a good idea. You need to first have a plan and stick to it. It's hard to be successful if you just keep changing your approach over and over again. Before you abandon that strategy, make sure you thoroughly test it before you walk away from it. You could be sitting in front of the best strategy that you've ever had, but because you're not giving it the time to properly test it, you're going to end up bouncing to something else, and you may keep doing this for years and years until you learn this lesson. This is a really hard habit to break. What's going to end up happening is you'll find a good strategy, and before you know it, you'll end up switching, bouncing to something else. You'll end up just going back to your old habits again, jumping from one strategy to another. You need to give this time to properly vet it. Even if you find a new strategy that seems to be working, you'll likely not be able to stick with it and you'll bounce to something else. You need to break out of this cycle and thoroughly test something before jumping to the next. Just remember, every time that you jump to a new strategy, you're starting from the very beginning again. This is because you're going to have to learn a new set of rules and test everything out again. This takes time and effort, and often it's not worth it in the end. What'll end up happening is you'll get so discouraged and likely walk away from this, never wanting to touch anything again. I spent years chasing after the next best strategy. There's an endless supply of them on YouTube, and you'll find out after you thoroughly test these, they don't work. You bounce one to another one to another one. What I found best is just simplifying your trading. The cleaner the chart, the better it is. That's just my personal experience. There's no right or wrong way to trading. Once you find something that you're comfortable with, follow it through long enough to know if it works for you. Switching strategies can lead to confusion and mistakes. When you're constantly changing strategies, it's easy to make errors. You'll end up with a book full of strategies that don't have any value. It's important to also remember that there's no perfect strategy. No perfect strategy. There will always be ups and downs in trading, and you need to be prepared for both. If you're constantly changing your strategy, you'll never really know what's working well for you. Avoid hopping to something else too quickly because you could potentially be sitting on a game-changing strategy. If you keep switching strategies over and over, eventually what'll end up happening is you're just going to have another strategy to add on to your big pile of mistakes. Being realistic is a really tough thing to do when jumping into this. There's a lot of people out there that think day trading is easy. People think that you just need to buy and sell, hold it for a short time and sell it. While there's some truth in this, the reality is trading is a lot more complicated than that. We all know that one video where somebody is showing how easy trading is. Now they want you to buy their signal service, and what you'll end up finding out, the only one making money is the one providing the service. In order to be successful at day trading, you need to be realistic. You need to understand that you're not going to make money on every single trade. In fact, some traders will lose the majority of their trades but yet still be profitable. The key to being successful is making sure your winners are bigger than your losses, or how your method performs long term. Another thing you need to be realistic about is the amount of time it takes to trade. Day trading is not a get-rich-quick scheme. If you think that's what day trading is, then this might not be for you. It takes time, dedication, and hard work to be successful at day trading. How far down the rabbit hole are you prepared to go? You'll also have to be realistic about the amount of capital you're going to need when starting to trade. If you've only got a little bit of money to start with, you have to be realistic and realize that you're not going to be able to make a living off of this. And this should go without saying, but don't trade with money you can't afford to lose. Some people consider trading for prop firms like FTMO and the Fivers, which can give you the potential of trading a sizable account. These challenges aren't easy to pass, and you need to be properly prepared and don't make the mistake of jumping in blindly. The majority of traders jump in too soon. Take advantage of the free FTMO 2-week demo challenge account. You can take this as many times as you want. If you keep these things in mind, you'll likely have a better chance of succeeding. Just remember, trading isn't easy, but it is possible. Just be realistic and disciplined. Not analyzing your trades can set you up for failure. This is a common mistake for a lot of new traders. It's important to have a system in place to analyze everything you're doing. Your journal can include entry and exit points, order size, stop loss, take profits, and anything else you can think of to add to your journal to help refine your strategy. If you're not recording your data, there's no way that you're possibly going to be able to improve your trading strategy. How can you know what is actually working if you're not recording anything? Analyzing your wins and losses more closely can make all the difference from you becoming consistently profitable. Not having a proper trading plan is something that you also need to be careful of. This is one of the biggest mistakes that day traders make. One of the worst things you could do is not have a plan. The problem is a lot of people think they can just blindly jump into the market and trade without any plan at all. The reality is that isn't going to happen. When trading this way, your odds are likely worse than flipping a coin, and we know how that works out for most people. Without a plan, you're likely to make more impulsive decisions that are not based on any type of logic or analysis. This could end up leading to losses in your trading account, and you could literally spend years trying to recover the money that you lost. A trading plan can help keep you disciplined and on track. A trading plan should also include your trading goals, your risk management strategy, and your entry and exit points. By having a proper trading plan, you'll know when to get in and out of a trade and how to properly manage it. This can help you avoid making costly mistakes. Your trading plan needs to have a hard set of rules with no flexibility. If you're serious about day trading, it's essential to have a trading plan, or what will likely end up happening is you'll just end up failing. Subscribe and like this video if you found this helpful. Thank you all, and until next time, bye for now.